Well, what a crazy day. I think the Twitter and the Twitter sphere is starting to kind of rule the markets more than anything else is as of late. But let's talk about hogs and what we've seen over there. Look, Asian swine flu is not gone away. It's still something we have to keep in mind and keep and worry about, but it's really making a mess of the charts. So you take a look at a hog chart and then also throw in some Twitter comments, and boy, oh boy, it's been very, very difficult to trade. And I've said this before, I said it last week, is that when you get these binary events, like are we gonna have any more flu or not, it's an up and down trade. It's hard to trade. Either you have the position on now right, or you have it on and it's wrong, but it's not something that you can follow a trend and get on board, right? So very dangerous, but it's not gone away. So the Asian swine flu is one of these binary things that we have to worry about, and then on top of it, we get some the Twitter sphere kind of hurts. Another thing I'd say, the second thing is there's another binary event, and that's also linked to Twitter, and that's going to be China. And when we have a deal or no deal on the table, again, that's a second binary event, which is a second 50-50 chance of something working out. We're all waiting to have something happen by tomorrow. That was something that everybody was saying. And it's not just the commodity markets. I mean, everything that we trade down here is being affected about anything anybody says. And as an anecdote, there are folks that are now tracking some of these Chinese flights to see if they're leaving early or not leaving at all. So that is how crazy everything has become, and that is why these charts, especially say hogs, look pretty bleak. And when I say bleak, they're all over the place. Volatility is very, very high. And then lastly, we're winding up here. We've got this about a 6 cent trading range, which is huge in hogs. So we've been up and down pretty big, and now we've come back a couple of times to 50% low from, or 50% retracement. That's a technical term. We've retraced 50% from the move that we had at the lows of February, March to the recent highs, and we've kind of stopped there twice. So the technicians are looking, that could be a place that we've maybe found some support. Twice we've come back 50% from the high, from the old move, and that has been something that we've been following as well. So keep an eye, you technicians out there. That's something that's kind of interesting. From the lows of February, March to our recent highs, we've come off pretty quickly, but we've bounced twice around the 50% mark, something that I think is significant. So we've got a USDA report tomorrow. That's going to probably get in everybody's way, which will make everything I'm saying right now probably irrelevant. But those are the things that we're worrying about. We've got two different binary events with the Asian swine flu and with China. And then lastly, you take away all the noise and just look at the technical stuff, which sometimes will really help guide you even in the face of these binary events and a USDA report. And we've kind of come back twice to that 50% retracement level. Keep an eye on that. I think that's going to be significant. See you later.